Hello, everyone. Thank you for joining me for this important healthcare update. What if you could slash your monthly healthcare costs by 30 to 50%? Choose any doctor you want and get better catastrophic protection than most Obamacare plans without it being insurance? Millions are already doing exactly that with HealthShares. Stay with me because millions are already doing exactly that with HealthShares, and the shift is accelerating fast. I want to talk with you about HealthShares, also known as Healthcare Sharing Ministries or HCSMS, and how they have quietly but powerfully begun cutting into the traditional base of people with healthcare coverage. This shift happened both before and especially after the COVID era enhanced subsidies on the ACA Marketplace, also known as Obamacare, were taken away at the end of 2025. Here's the shocking truth. The ACA Marketplace just lost over 1 million people in 2026 after those big subsidies ended. At the same time, HealthShares keep growing strong, with total membership now well over 1.5 million and climbing. For many healthy individuals and families, these programs are no longer a niche experiment. They are a serious, flexible alternative that is gaining real traction. First, let me give you a quick primer for anyone who is not familiar with them. HealthShares are not insurance. They are arrangements where members who share similar values or beliefs voluntarily pool their money each month to help pay one another's eligible medical bills. The idea is not new. It has deep roots in Amish and Mennonite communities that have pooled resources for mutual aid for over a century. Modern healthcare sharing ministries took off in the 1980s as healthcare costs soared. They received a big boost from the Affordable Care Act in 2010, which exempted qualifying ministries from the individual mandate. Back then, membership was around 100,000. By 2014, it had grown to about 160,000. Today, estimates put total United States participation at well over 1.5 million people, and the number is still climbing. There are basically two main types of health shares, and understanding the difference could save you thousands. First, the faith-based ministries. There are several strong options in this category, including two of the most popular and well-known Medi-Share and Christian healthcare ministries, also called CHM. Medi-Share is pronounced Medi-Share. It is run by Christian Care Ministry and was founded in 1993. You have probably seen Medi-Share advertised on television and radio. It is one of the largest and most visible faith-based programs. Christian Healthcare Ministries, or CHM, is the oldest broad-based faith-based ministry. It was founded in 1981. CHM has become a household name thanks to strong endorsements from Dave Ramsey and his team. Both Medi-Share and CHM are separate faith-based health shares. They typically require a statement of faith and adherence to biblical lifestyle guidelines. The other type is non-faith-based options, led by Zion HealthShare. It is pronounced Zion HealthShare. Zi rhymes with I, on like the word on, and then HealthShare exactly as it sounds. Zion HealthShare has no religious requirement to join. It is open to everyone and focuses instead on shared values like personal responsibility and healthy living. It offers the same kind of cost-sharing model but without the faith component. Here's the key point. Health shares are no longer a fad. For people who live within the lifestyle guidelines and do not have major pre-existing conditions, they can actually deliver more flexibility with providers and better catastrophic coverage than many major medical insurance plans. You choose your own doctors and hospitals, no restrictive networks in most cases. And the monthly share amounts are often dramatically lower than ACA premiums. The qualification process is straightforward but important. It is very similar to the medical underwriting you would go through for a private health or major medical plan. You have to meet lifestyle standards, no tobacco, limited alcohol, and so on, and pass a health review. That is why these programs tend to attract healthier people and why they can keep costs down for their members. Now let us talk real numbers. The ACA Marketplace dropped from roughly 24.3 million people in 2025 down to about 23.1 million in 2026. Meanwhile, HealthShares continued their steady growth, and in my own business, I have seen a huge shift toward them. Many people report monthly contributions that are 30 to 50% lower than comparable ACA plans, often in the range of $150 to $300 per person versus averages well over $540 on the marketplace. Of course, these programs are not for everyone. They have guidelines and they are not insurance, so there are no guaranteed payouts like you have with a regulated policy. That is why I always remind people, just as you would carefully vet any insurance plan, you should thoroughly vet the HealthShare you are considering. Look at their membership numbers, their track record of sharing bills, their financial statements, and real member reviews. Do your homework. Now, here is my honest opinion after years of hands-on experience. I believe HealthShares are going to keep taking more and more market share from the ACA Marketplace. We are already seeing companies move their healthier employees into HealthShares while leaving higher risk individuals on the marketplace plans. It is a fascinating trend, and I expect you will see a lot more mainstream stories and heavy marketing about HealthShares in the coming years. HealthShares are not perfect, and they are not right for every situation, especially for people with serious pre-existing conditions or lifestyles that do not meet the guidelines. But for millions of responsible, healthy Americans, they have become a smart, faith-aligned, or value-aligned way to handle healthcare costs with greater freedom and lower monthly outlays. Thank you for your attention. I am happy to take any questions you might have.